Now, we'll be talking about the stochastic oscillator. It's called the Stoch. It's also an indicator, all right, that you can also use in the forex market to determine when to either buy or sell. It can also be used as a confirmation indicator. So for this video, we'll be talking about the stochastic oscillator. Let's head over to my screen. Let me show you how it works. This is our chart. Now, this is on BTC USD, as you can see above. All right. So what you want to do right now is add the stochastic oscillator. So it's normally called Stoch. So what you want to do now is click this F sign. Once you tap the S sign, you click main window. You tap the plus sign. Then you scroll down to locate stochastic oscillator. As we can see, this is it here. You tap it. Now these are the settings that comes with it. These are the default settings. So you're not doing anything, don't touch anything, just leave it the way it is. Then you click done. Now, as you can see, we have this stochastic oscillator on our chart. That is what you're seeing below here. And as you can see, its own candlestick or its own line chart, because this is a line chart, as you can see below here. Now, if you check at the right hand side, we have the 80 and 20. All right, 80 and 20. Now let me see back. Let me see something. Let's go back to the oscillator. We tap the oscillator. Let's see. Okay. All right, let's increase. No, let's leave it. Let's leave everything the way it is. It's okay. It's fine the way it is. All right, let's go back. Now, according to Stoch, it's just like RSI. If your candlestick touches 20 or below 20, you buy. If it touches 80 or above 80, you sell. That is just it. It works like the RSI, nothing else. All right. So now let's do a little back test. Now, if you want to use the Stoch, I always prefer use it from a 5 minute time frame, 5 minutes upwards. Don't use it on a 1 minute time frame. So now let's change the time frame to 5 minutes. All right. So let's do a little back testing. Now we are starting from where price is as at now, where the market is. As you can see, this is where the market is as at right now. Now, if you check, when price touched 20, let's use this box so that we can understand. When price touched 20 here, as you can see, when the candlestick touched 20, what happened? If you watch here, it started buying. All right, as you can see, this is it. Immediately price touched 20 below here. If you had entered a buy, you would have been in profit right now, or let's say the trade will be going in line with your prediction. From here, as you can see, it's already buying. It has given us nothing less than, this is how many pips, this is close to like, is this 17 pips or so? So let's just, as you can see, let's forget about the pips, but this is it. Immediately price touched 20, as you can see below, it started buying. Now let's check this other, let's check for sell. Now immediately the candle touched 80 here, as you can see. Immediately the candle touched 80 here. Let's look at it from this angle. Immediately price touched 80 and above. 80 and above. What happened? It sold. It sold. It sold from here downwards. All right. So if you had entered a trade, let's say you had entered, immediately you notice it has touched 80 and above, you entered a sell. From here, you put your stop loss just a little bit above here. Then you put your take profit, let's say here, as your take profit. You would have closed in profit. Now, this is the second back testing we are doing, and it has actually worked. So let's continue. Now, like I said earlier, no indicator or no strategy is 100% accurate. All right, there are some times that they will disappoint, but the most important thing is if it has a high winning rate. Let's say, for instance, you take trades 10 times in a day. Out of the 10 times, 5 of the trade came out successful and 5 didn't come out successful. If you use a 1 to 2 risks to reward, a 1 to 3 risks to reward, you will still come out profitable, or you still close that day in profit. All right, so let's continue. We have done one test right now. It's actually the first test we did. As you can see, it's still buying. The second test we did went perfectly well. Now let's check the third test. If you notice here right now, okay, let's check the third test. This is the third test. I don't know why it's doing like this. So let's see. Okay, this is the third test. When price touched 80 and above here, around here, it actually sold. It sold. It sold to this point. As you can see, it sold to this point. But let's put our box just to look at what we are talking about. So when price touched 80, if you notice, it actually still sold. So this is the third back testing, meaning it's actually working. Now let's check the fourth one. When price touched 20 down here, as you can see, it touched 20 down here. Let's go back. Sorry. Price touched 20 down here. And if you check here, this was where it touched the 20, around here also. What happened? It bought, right? And as you can see, it did the same thing. Now this is the fourth back testing we are doing. That's one, two, three, four. All right, so let's continue. Now when price touched 80 and above here, as you can see here, around here, just watch, 80 and above, what happened? It sold. And as you can see, it really sold. So if you are a scalper, you would really enjoy this, because scalpers don't look for too many pips. Scalpers look for at least 20 pips, 15 pips in the market, and they are done. So if you're a scalper, this indicator will actually help you a lot. All right, so now this is the fifth back testing we are doing, and it's actually going in line. Let's do one more. So you can go and continue the back testing by yourself. Now, as you can see, this is the last one. When price touched 20 and below, what happened? Look at it here. What happened? He bought, right? Did he buy? Or he did buy? As you can see, he bought. All right, so this is just to tell you that the stochastic oscillator actually works. But now professional traders will tell you, oh, this type of trading or using indicators are for babies. All right, no doubt, I understand. I will not say they like. If I also see somebody trading with just the stochastic oscillator, I might say, oh, okay, oh yeah, you are still a baby. But truthfully, the person is not a baby. You actually use what works for you. Because of me as a professional, I love using the big screen. I love using the I love using trading view. I love using price action. I love using other strategies that, quote and unquote, are meant for professionals. Doesn't mean somebody using the stochastic oscillator is not also a professional. But although this is an introduction though to technical analysis, understanding technical analysis. So as a beginner, you must just first of all know all these little ones before we now start moving to trend line, understanding the ones that are a little bit more technical than this. All right, so if you start with this, it's not bad. Now if you want to catch more pips, let's say for instance you are not a scalper, you don't like scalping because it's just too close, just too close, and you don't want scalping, so move the time frame to either 30 minutes. All right, look at now, when you put it to 30 minutes, you would get higher chances of getting higher pips. Do you understand? As you can see, just look at it. As you can see, so the higher the time frame, the higher the amount of pips you'll be getting. Do you understand? So that is it. But for scalpers, I advise you use 5 minutes. Just be entering the market, be coming out, entering the market, coming out. If you take 5, 6, 7, 8, 9, 10 trades in a day, you are good to go. You don't need to trade 100 million times. All right. So this is as simple as ABC. This is the stochastics oscillator, and this is how it works. Thank you very much, guys.